Hi there, my name's James Briggs. I'm Intermediary Sales Director at Afin Bank. During this presentation, I'm going to talk to you about the history of Afin Bank, where we came from, the types of clients that we look to support with our new specialist lending range. So first of all, Afin Bank are owned by one of Africa's largest insurance companies, Waikerie Reinsurance, and we're on a mission for financial empowerment for those clients who are underserved by the UK specialist lending market at the moment. There are significant gaps in the specialist market for clients that continue to be underserved who add significant value to the UK economy, and those in particular are the clients that we're looking to support through our relationship with Brilliant Solutions Mortgage Club. So you'll hear me talking about diaspora or diaspora clients throughout this presentation. Effectively, these are clients that don't come from the UK originally, so they've moved to the UK to work and add value. The term diaspora refers to clients who move away from their original homeland but maintain strong cultural ties with their original homeland too. So, whilst in the build phase for Afin Bank, we did significant market research to understand some of the gaps in the market, and the results that we found were not surprising. So, if we look at one portion of the diaspora in the UK, which is the African diaspora, 79% of those said that they face unique challenges when it comes to securing a mortgage in the UK. A high proportion of those applicants are tenants, 88%, but 80% were looking to buy or remortgage over the next 3 years. So, whilst home ownership amongst this particular group was quite low, there's certainly ambition there. However, a lot of these clients have been turned down, 87%, for numerous reasons, visa status, nationality, but also because of lack of credit history or lack of score that's available. If we look at some of the stats on where these clients are moving to the UK from, we can see the top five being India, Nigeria, Pakistan, Zimbabwe, and Ghana. So we're accepting these clients into the UK, but unfortunately, there are very limited mortgage options for these clients until they've been here for between 3 and 5 years and achieve that indefinite leave to remain status. So we talk about the African diaspora, but Afin Bank is open to applications for clients from anywhere in the world. So if we've granted a visa, we've invited them into the UK and they're working, then we want to support them with mortgage facilities. And you can see the long list there of UK clients, UK residing clients that can be accepted. So the European clients, either on settled or pre-settled status, Tier 1 visa clients, Tier 2 visa clients, and we can also be flexible for second applicants who maybe have an expired visa or they're here on a family or spouse visa. Another key target area for Afin Bank is to support self-employed borrowers. Now, over a quarter of self-employed borrowers have faced some significant barriers when it's come to achieving a mortgage. That could be through fluctuating or unpredictable income, or even insufficient proof of income. Maybe they've only been trading for 1 to 3 years, or their business is increasing in turnover, but they don't have a solid 2 or 3 year average earnings. So this continues to be an underserved sector, despite several specialist lenders targeting the self-employed market. These borrowers think that lenders don't understand their circumstances and are not flexible enough on the types of income and how they pull money out of their company and how they get paid. So just to expand a little bit on the target market and the types of clients that we want to lend to at Afin Bank from day one. Well, we have a residential proposition and we have a buy-to-let proposition. The residential proposition is targeting those diaspora clients, so non-UK clients who are over here living and working through the visa system. We absolutely want to support those clients, and they only need to be in the UK for 6 months. It's a key part of our criteria. Those clients that have been here a little bit longer, we will still lend to them, providing they've got a short period of time left on the visa, normally 6 months. But if they've got less than 6 months, as long as they've made an application to renew that visa, we're going to be comfortable about those as well. We talk about the self-employed borrowers, so we'll lend to them when they've got their first year's figures, but 18 months trading. And we're keen to support self-employed clients with more complex income setups. So that could be clients who've got net retained profit, take their income out through directors' loans, or even clients who need to tap into forecasted income. So as long as a client's more than 6 months into their current trading year and they've got an accountant that can give us a year-end forecasted figure, we can use 90% of that forecasted figure for affordability purposes. When it comes to landlords, this is our launch proposition, which we will be expanding as time goes on. But at launch, we're lending to individuals only, not limited companies yet, and to non-portfolio landlords. However, we do still have the same criteria when it comes to visa clients. So just 6 months in the UK to access our buy-to-let products. And we've got options for traditional buy-to-let and consumer buy-to-let for those accidental landlords. We have options for top slicing for those cases that fall short on rental coverage. And we can also lend to clients who are first-time buyer, first-time landlords. So maybe clients working in the capital cities can't quite afford to buy their own residential property yet, but want to buy an investment property somewhere else in the country where it may be more attainable. Some of the preferences and needs we discovered when doing our research, what's important to these type of clients and what's important to our broker partners. Having products with no tie-ins, so we have a range of base rate tracker products with no tie-ins. They also have unlimited overpayments. We can allow for small credit blips on customers' credit profiles, so we only look at the last 3 years from a credit perspective, and we don't do any credit scoring. So we're certainly not an adverse credit lender, but we do understand there will be sometimes some small blips and instances where repayments were overlooked. So we do want to support those clients still. A key area and something that was really important to diaspora clients when we were talking to them was accepting deposits from overseas, which we can do at Afin Bank. So family members who want to gift money to clients who are buying in the UK, residential or buy-to-let, we can support that. We need to do some due diligence and just understand the origin of the funds, as any bank would, but we're certainly keen to accept those, and we see that as a growth area. There's also no minimum amount of time that the funds need to be in the UK for us to be able to accept them. We can also consider married applicants who want to purchase on a sole basis. Some clients will have reasons for wanting to do that. And we have options for higher income multiples. So on our residential proposition, we have a standard product range, which is 4.5 times income, but we have a professional range as well for clients with professional qualifications. A full list of those qualifications can be found on our website, afinbank.com, or through speaking to our partners at Brilliant Solutions Mortgage Club. For those professional clients, younger professionals up to 35 years old will go to 6.5 times income. When they get to 36 and over, we uplift the LTI to 5.5 times income. So some opportunity for those professional clients to borrow at a higher multiplier than our standard products and the high street, because we expect those clients to be on a upward income trajectory as their careers progress. So I'll round off by talking about some of the different types of clients that we aim to help at Affin and some of the different scenarios. So here we have a lady, Aminata, 34 years old, working for the NHS as a trainee radiographer. We would class this client as a professional client. She's looking to buy her first home, but given the house prices where she's looking to buy, she's falling short on income multiples. Now, because we can treat Aminata as a professional client, and given her age, then we can lend to her at 6.5 times income, which gets her over that threshold, will hopefully enable her to buy. And then in a couple of years' time, when she's fully qualified, she'll see an increase in her salary, and then the market's more open to her. Potentially, she might choose to remortgage away to the high street. But we've done our job helping her onto the property ladder. Then we have Gary, self-employed builder. He's been running his business for 18 months. Got off to a good start with 60,000 earnings in his first year. He's got a pipeline of business. He's established himself. He's getting referral work, and his forecasted income for the second year is 100,000. But he's not got to the end of his second year yet. He's halfway through his second year. Now, because Gary's got an accountant with a suitable qualification, we can accept an accountant's certificate, and part of that accountant's certificate is forecasted income for the current year. The forecasted income is 100,000 for the current year, and we can use 90% of that. So instead of using his first year's figures at 60,000, we're able to use 90,000 for affordability, which supports both LTI and the affordability calculation itself, giving Gary much more scope and borrowing power. And finally, we've got this chap, Arjun. Arjun hails from India. So he came from an IT background in India. He's here on a tier 2 visa, working in the UK, skilled worker visa. He's been here for 9 months, so he's over that 6-month threshold that we like. He's on a day rate contract, so it's £300 a day, 5 days a week, and we'll assume a 46-week year, so gross income of £69,000. We're comfortable to lend on that basis. Day rate contractors are acceptable for us, providing the client's got a 2-year track record in the similar industry, and that can be that experience can be built up overseas. So Arjun meets our criteria in terms of his experience and a visa and time in the UK. So we would be happy to lend on that basis. Sometimes you'll want to understand how much a client can borrow before engaging with a DIP. That's fine. We have a full affordability calculator on our website where you can understand what's available in terms of LTI and true affordability. The affordability on the calculator matches our affordability at DIP, so you know you're going to be getting an accurate result on day one. In terms of loan to value that's available, on our prime standard residential proposition, that's 80%. That rises to 90% on our professional range, and it's 75% loan to value maximum on our buy to let range. Hopefully that was useful and informative. If you have any questions, feel free to pick up the phone to us. All of our contact details are on afinbank.com or email intermediaries@afinbank.com. I thank you for listening to this. I thank Brilliant Solutions Mortgage Club for hosting it, and we look forward to working with you on your first case.